All right, so there we go. All right, so let me see. I want to make sure it's sharing. Let's do a new share. I think it stopped sharing the screen. I want it. Okay. Share it out. Can you see? Is it sharing, Tony? Tony, I think it's yeah. I think it's sharing this one.
Can you hear me?
Oh,
No.
I can hear you now. There you go.
Okay. Yeah, I can see your screen.
Okay. All right. Cool. All right. So this is the one that we're pretty much going to use. All right. So the huge idea here is basically trying to pinpoint the most likely area of reversal, so to speak, and then basically kind of identifying, the order blocks, what have you, that has the most likely chance of reversing. So it's interesting here. We have we have a few order blocks right here to kind of look at and make that determination. So basically, so you got support and resistance. So first, I'm gonna explain the difference to make sure it's kind of we're on the same page when it comes to the difference between support and resistance and order blocks or supply and demand zones. So the difference is with support and resistance, a order block or an area doesn't become support and resistance until it's been tested. So it's a support when it's been tested as support, and it's resistance when it's been tested as resistance. Different from supply and demand zones. Supply and demand zones are created from the transactions, the high volume of transactions, buying and selling transactions. Those create order blocks, which also become supply and or demand zones, but which also become support and resistance, just because of the nature of the activity that took place there. But different meanings, different things. And I think like sometimes we get those confused because they do occur at the same area, so to speak, right? But there are reasons why they're named differently. Like I said, support and resistance zones are areas in the market where, again, they've been tested as such. Prices come and reject it off. That's what makes a support or resistance a support or resistance. It's held its area, or what have you, tested. But again, supply and demand zones, and again, they can be synonymous, right? So supply and demand zones are created through order activity. So I just wanted to make sure I put that out there first so that we understand, what we're trading when and things like that. So here we got examples of a few different order blocks. So the thing that I really wanted to key in on is when we're utilizing the order blocks and these areas of interest, what makes them tick, what makes them one better than the other. And we got some really great examples here to kind of illustrate that. And what I did the other day, as I'd explained, was basically I wanted to pinpoint where the market was more likely to reverse when it got into the order block. And of course, the order block ended up mitigating, which was fine. But before it mitigated, I was able to kind of pinpoint. So I'll walk you through that first, Tony, real quick, and then we'll backtrack a little bit, and then we'll look at those order blocks on the 15-minute. All right, so we got some order blocks here, which is cool. None has been created, at least from the 4-hour time frame down here yet, because the market pretty much shut down when the activity was happening down here. So basically, what I was looking at last week was we were looking for the drop. We saw the drop happen. We saw the strength of the market. We looked at order block to order block. So we looked at the higher the supply or support order block, and we looked at the order block that was here as a resistance or a demand zone. And basically what ended up happening, the price, came to the demand zone that we were looking at, the area, and mitigated it, basically grabbed the liquidity that was there. And basically what it did, and I pinpointed it, prior to, and what I ended up seeing when I used the volume profile to kind of look to see where the most likely area of reversal was going to happen, it was right down here. And what I saw was last week, before this over here even happened, I was able to pinpoint that the reversal was going to happen here in this wick. And as you can see, this green right here indicates the liquidity that's in this wick, or what have you. But in order to, how I was able to catch that was looking at the volume profile. So what we're going to do, we'll take, so I saw this here on the 4 hour. I was like, okay, this is the area where it's more likely to reverse. And then the other thing is we had the previous day's low, which it seems to have reversed off of. But let's look at, we'll look and see why. When we look at the volume profile, which is going to show us the buy and sell activity in the candle at this area, we'll see where the liquidity was, and thereby get our basically our strategy for pinpointing reversal points in these areas. So I want you to keep this one in mind. So we're looking at, so we want to look at this volume profile, this session volume profile from Thursday, February 16th. Looks like around roughly the 5 a.m. candle. So we're going to go back to the 15-minute and we're going to look at it from there. So we can blow it up and look at the buy and sell activity, which is going to tell us where that, the actual buy and sell activity that was there and where the liquidity was, exactly where the liquidity was. So we're going to reverse back on our charts. So I want to get that session. All right, so this is the 16th. So we were looking at around 5 a.m. That looked like it happened more around here. So yeah, so I'm gonna take it because, all right, yeah. So this is where it was basically, because we're coming off of this. It's coming off the area of this point of control. All right, so we see it right here. So here's what we're gonna do. So we're gonna blow it up so we can see it real good. All right, so we see where, all right, so this is, yeah, so this is the, let's see something real quick. Yeah, so yeah, it was right here. All right, so this is the low, that point of control that we were looking at on the 4 hour. It was a little bit off, I guess, indicative of the time frame difference or what have you. But when we look at it, so right here at the point of control, let's see what volume is in here. So we got 9.1K buy volume versus 8.5K sell volume. All right, so that wasn't necessarily what I was looking for. So what I was looking for was the area, the price point at which there was more selling activity than buying activity, but the market was able to push up. So that's what we want to look for, because that's what creates the liquidity, where you have buy or sell activity of the opposite direction that price moved, was able to break out to, that creates that order block or that zone. And that's what creates the zone of reversal, the reversal area, because that's where their orders, you got trap traders, you got unfilled orders and stuff like that, because you got breakout traders that were looking for the market to continue to go down, which is why you're looking for that activity to be greater than the activity that was utilized to push the market up, because that becomes the liquidity. So when institutional traders, hedge funds and stuff like that, for them to place their orders, they need a large area of interest and activity in the opposite direction to fill their orders. So that's how the market, that's why liquidity is able to move the market in any one direction. It's, based off of them being able to fill their big orders, but they need activity of the opposite in order to do that. So when we look in this area right here, we see that right here, we had 1.4, 1.6 in sales. So we had more selling activity right here than we had buying activity. So naturally, this became the reversal point. This is where they were able to fill their big orders and move the market up. Or what have you see right here, where we have more selling activity than buying activity. But again, eventually the market was able to push up. So this area becomes the area of interest, as we saw on the 4-hour time frame. So when we dig into it to see what caused this area of interest, in the future, or currently, right, we have an idea of what it was. So that's how I was able to pinpoint. So when I saw this, I was like, okay, so what's happening is this area. So it wasn't necessarily the point of control where price was going to reverse. It was going to be between here and roughly here. So between these two price points where price was going to reverse because of the liquidity that was actually sitting there. And that's indicative of this wick right here. So this wick, as you see, this wick spans these two areas on the volume profile, right? So which we could see where the selling activity was greater or larger than the buying activity. So right here, not necessarily right here, but right here it was, and then right here. It wasn't right here. So it was right here. These two right here is where it was, again, created this wick right here. So price pushed down. You had a bunch of selling activity because you had sellers that got into the market to try to continue to push the market down. They created the liquidity that was needed for the buyers to push the market up with as little effort as possible. And that's why I coined the phrase level of effort. The level of effort is what determines, again, whether that area is strong to one side or the other. So if the buyers were able to push the market up so significantly with less orders, then you have sell orders sitting here, then their level of effort was a lot less than the sellers. So the sellers put a lot of effort into trying to push the market down. The buyers put little effort in to push the market up. And that's what created the zone of interest. And again, this wick right here area was the area that I was looking for price to come back to and grab that liquidity before we did a reversal. All right, so that's how I was able to determine that. And then when we look, so we say, right, so this wick, and it starts, so we're going to say, so the activity was right here, but this wick right here starts around 19 to 11. So 1.19 to 11, we can say 19, 152 to roughly 211, 213. So we're going to fast forward to the future. You catching that so far, Tony?
Yep, I am good so far.
All right, cool. All right, so then when we got to that activity, so we got to that, we got into that area the other day, and this is the area we could see where we came back to, because we see this is the point of control line right here, and you see how price came right below the point of control line before a reverse. So it pushed down, again, creating additional liquidity. That's what happens. And buyers were able to eventually push the market up. Now, with this one at the moment, we see that there's actually right here, there's actually more buying activity right here in this area. But this is, again, creating a new area. Maybe not, because and that's why, again, we're looking at, it hasn't even created an order block here yet, because it may not be finished, with this down move. And again, what we're looking for is the opposite of what we're seeing right now. So right now we're seeing buy activity that's pushing the market up, right? Now, what we see here, though, because we have a new point of control at the moment, but when we look right here in this area, we got more selling activity, more selling activity, more selling activity. So that's indicative of, these pushes down, what created these wicks here. But right here, the market ended up being a bit choppy for the most part. You can indicative of these wicks and stuff. So after news, we knew there was going to be volatility within the market. So of course, all of this activity right here is creating an area of interest, and we're seeing the volume that's coming into the area at the moment. But again, what we're looking for the reversals and everything, we'll wait, to see, again, areas where the price is more likely to grab the liquidity and reverse back. And look at that. We just got an order block that popped up just now. So kind of knew that was going to happen. So, all right. So we got the order block right here, and we see, but in this order block though, we have, let's see what kind of activity we have here. So we got, so right here in this area, we got slightly more buying than selling. Here we have more selling than buying, more selling than buying, more selling than buying. So in this order block right now, and that's a good thing, we have more sell orders than buy orders. But what we want to see though is we want price to break out of this order block to the upside, because again, level of effort. Then we'll know again what type of order block this is and how strong or weak it is based off of who controls this order block. Again, level of effort. If this order block stays to where you got more sell activity and it pushes, and again, we see the wicks being created now. This is a pretty big wick where buyers are now they're pushing the market up with less effort than the sellers, but we have more sell orders. Again, that's what's needed in order to propel the market further. So the wider the gap between sellers and buyers in this order block, the further price is going to go, and the more liquidity that has been created to propel price in any one direction. So the more selling activity versus buying activity in this area, the more fuel we have to move the market. Because we got all the liquidity that we need to move it, of course. So that's the idea behind it. That's how I was able to look and find a more likely reversal point, which was right here. And we see that, of course, with that being said, it created additional liquidity, and we'll see what the market does as it looks to probably break out of this area. And we're creating other areas of interest right now. So the idea now would be to look to see where price is going at the moment. Like, as price approaches this order block, what's likely to happen. And we can see at the moment, it looks like buyers have a little bit more room to go, but the gap isn't that wide between buyers and sellers in this order block. So this order block can very well break down. Or what have you. And we'll see. We have this point of control line right here. So let's see what type of volume we have sitting here at this point of control. Let me do this real quick. All right. So the volume we have sitting here is 6.5 to 6.4. So we have more sell volume sitting here at this point of control line, which is indicative of pushing the market down. And here's why. Here's what I found about that. So of course, in these candles here, so this is the top, basically the demand, no, the supply zone or support area, right? So these are your tops and bottoms, basically. You're where you do have that imbalance, basically. So we can call it imbalance of activity that is the reason for the market being pushed down. So when we look here, this is 60%. This is where the most activity took place. So within this area. So let's take a look and see exactly what that activity looks like. And I'll go back to my point here with this order block. Because that's what you kind of want to see on a down move. We'll look at it here in a second. But when we look at the activity that's sitting right here in this order block, this is a 60% order block. So very high chance of this order block breaking down. We can see it's at a Monday high. So if price was to come back here, we're seeing 5.2 on the sell side, 5.7 on the buy side. That's good. That's a good sign, because we have more buying activity than selling activity to start with. So we got the liquidity that's needed to reverse the market a little bit, maybe, depending. But it's moving in the right direction. Again, as we look at this, we see that in this entire order block, we have more buying activity than selling activity. So this is a very strong order block for a reversal. And as we're looking at it, it's starting to change a bit. But in any case, so as we're looking at this, we see the activity that's sitting here. We see the difference, the gap between the buyers and sellers. And we see that the sellers are actually the ones in control, even though it looks to be neck to neck. When we actually dig into the volumes, we see that we do have more buying activity in this order block right here than we have selling activity. Now, the point that I wanted to make, and again, it shows even at this very top order block that was made. So this entire area right here is a very good candidate for reversal zones. And we can dig even deeper to see, where it's more likely to reverse. And typically that's where you're going to have the biggest gap, between buying and selling. So, where's most of the liquidity sitting at, even within this order block, or what have you, that can tell you pretty much, give you an idea where your most likely reversal point is probably going to be. It's typically going to be where your biggest gap is. But we can see that, when price comes here, again, just depending on how much liquidity there is, how big the gaps are, it may not even need to get into this order block right here to grab liquidity. Saying as though we have, some strong, we have some activity we have sellers who have a bit of room to go here to push this market down, or what have you, if need be. So, we'll look to see how price reacts to this high. Monday high right here. But then let's look and see what's at this point of control. So even at this point of control, we got more buying. Looks like we got more selling activity than buying activity. But what I was going to get at with this order block and under is that what happens is once the market reverses and the liquidity, we can say the liquidity, the interest, from the buyers has dwindled a bit, then of course what happens is you get more sellers, you get more retail sellers that get on board with the movement of the market at that point, which is why you'll see on order blocks below the top order blocks, or what have you, in a movement session or something like that, is opposite of what we're looking for reversals, because the market is now moving in a downward direction, you got more sellers overall in the market at this point because of the activity that's happened, or what have you. So that's why you'll see, after the market has made its move or what have you, price has made its move, that you'll see stuff like this where, it becomes a little bit more equal. And then you may even see more activity, because you got bandwagon jumpers. So people have gotten hip to, the market moving in this direction. So they want to get, become part of the action. So that's okay to see this right here, as the market moves in the direction. So that's why you'll see that. But when we're looking at the actual tops and bottoms, for our reversal points and stuff, you want to see the opposite. You definitely want to see more activity of the opposite direction that you want the market, or, you believe the market is going to move, because that's where institutional traders, that's where they're going to look to put their orders, because they need that liquidity in order to fill their orders, their large orders, to move the market in their direction. All right, so with all of that said, that is the idea. That's the process, and then that's how we'll look to trade it for the most part. going forward.
Okay. That's a lot.
Yeah.
Yeah, but guess with a little bit of practice, I'll be able to digest that a little better. So you got the SVP on here, and what else you got on here?
So I got the SVP, and like I said, I needed to see the actual activity to kind of pinpoint it, Tony. So it's
Mm-hmm.
SVP, and then well, let's see, I'll tell you all the indicators I have here. So we got the price action concepts, the premium. Oh, the liquidity swings. Yeah, that's what I was saying. So Lux Algo has their own version of liquidity swings, and I can hide everything else so you can see it.
Gotcha.
You can see it right there. All right, so let me do this real quick so you can see the liquidity swings. So these are the liquidity swings right here.
Okay, I got you.
Yeah, and what you want
Oh,
to do with
that's not even premium. I think that's open for everybody.
Yep. This one's open source. Yep.
Yeah. Okay. Yeah, because I went looking for it the other day, and I thought you were saying that it was premium. So okay.
And what I did too, so that I could see it better on here, Tony, you see where it's darker in some points than others. But what I did, I went and played with the settings, to make the areas darker so I could see them better. So
Okay.
yeah, because it was difficult for me to see them, so I just went in and cleared it up. I played with which colors look better on the chart, so you can see why it's a little different.
Gotcha.
Yeah, so I did that, tailored it to what I was looking for, so that I
Gotcha.
can see. Yeah.
Okay.
And that's good because we can see, the liquidity. Like I said, it's another Lux Algo joint, but we can see where the liquidity is, for the most part. It, kind of lines up with what we're analyzing anyway. So I didn't want to the session volume profile shows me the numbers, which adds confluence to these liquidity zones and everything. So for the time being, I'm going to keep them both, but I do think it's a bit redundant. But again, we don't know how accurate one or the other may be. I mean, the numbers, obviously the best thing to go by. You never really want to trust the indicator alone by itself, but maybe if it continues to basically give confluence to each other, then maybe we can get rid of one or the other. So we'll see. But for right now, I'm gonna keep them both on as they serve my purpose.
Got you. So you got rid of the heat map.
Yeah, I got rid of that because I couldn't see it. It was because you couldn't change the color, make it brighter. So I was like, it's kind of pointless to me at this point, because there are other things that I need to see on my chart, and that was just kind of getting in the way. So,
Okay.
but I was like, let me try because this one is this one is fairly new from Lux. They just put this one out in the last couple of weeks, so I was like, let me just try it and see how it works. So yeah, it seems to work the same way as the heat map, but I can see it better.
Right, that's what I was gonna say. It looks like it works about the same. Okay. All right, let me add this real quick. It's a liquidity swing. Um, and I can't spell today.
Oh, it's all good. I can't spell any day, man.
There we go. Okay, there we go.
I spell it the way I hear it.
Right. All right. So yeah, I think I got it.
And remember on the 4 hour, like I like when you if you're going to use the session volume profile, that's the main thing that I use it for is obviously, the areas of interest, because obviously these are areas where the most volume is. But I put I extended the point of control lines to the right. That's how I'm able to see them on the 4 hour. Because remember, you're not gonna be able to see the profile, on the 4 hour.
Oh, right. Okay.
Yeah, but being able to see the point of control lines, that's really what we're interested in anyway.
I got you. Okay. Did you I see they got this on the liquidity swings, the intra bar precisions. And I guess that's the only other thing that's on here.
Yeah, that's these right here where you saw like almost like liquidity grabs or whatever the case may be.
Oh, I got you.
Yeah.
So what time frame are you using for that?
It's I got everything on chart now at the moment.
Oh, okay, gotcha. All right. That way it changes as you
Yeah.
cross.
Yeah.
Okay. I don't know. Let me play with this and see what it looks like. Definitely. 'Cause if the two can make a difference, yeah, that'd be cool. Like you said, it allows you to see the liquidity swings. You can see better.
Right. Yep. Yep. Because yeah, just trying to reduce, some of the clutter, on the chart so that I can see what I need to see, you know.
Right. Exactly. Exactly. So SVP. Let me add the SVP real quick on this one.
All right. So I'm gonna stop the recording, Tony.
Okay.